We start off with Apple losing its top spot at the market in China. Shipments to the country plunging 17% in 2024, according to research firm Canalys, with a whopping 25% drop in just the fourth quarter. That was Apple's worst yearly decline ever and put it into third place behind China's Vivo and Huawei. The stock falling over 4% today for its worst day since August. It's now lost nearly 9% already in 2025, making it by far the worst performing Mag 7 stock so far this year. Analysts on Wall Street have also been getting a bit more bearish. Just last week, MoffettNathanson issued a rare sell rating on the stock, slashed its price target, saying Apple could fall another 18% from here. The biggest concern there, tariffs. And with President-elect Donald Trump just a few more days from returning to office, could that threat just be starting? I guess at the heart of this whole thing is there more pain ahead?
You know, there's an interesting word in the English language, swashbuckler. Are you familiar with this?
It's usually associated with...
It's like a pirates.
Yeah, Tim
thank
knows.
you. Thank you.
And I think for MoffettNathanson, for example, to make a call like that in the midst of what was that's a pretty much a swashbuckling move, going against sort of being out there, right? And I sort of admire it. I'll say this, where we traded down to today, right to the moving average. But we've seen moves of this magnitude before. And I think finally some of the China concerns that I've had, and they've been incorrect to have, but are starting to come to fruition. I think valuation is coming to the forefront as well. So you get through this level, then I think the November low of 220 is in play, and it feels as though it's going to continue to trend towards those levels.
Seems like there are a lot more question marks about the upgrade cycle and the strength of that upgrade cycle based on AI offerings, seeing that there are very few AI offerings that are actually compelling enough for people to pay a lot more money for a new phone, Bonawyn. So that plus the possibility of Apple not necessarily falling into the crosshairs of tariffs that we put on China, but retaliatory tariffs that China will take on U.S. companies.
Well, it would make sense. I mean, they're one of the largest operators, and if you look at that whole greater East region, it's about 16% of revenue. So the implications are significant here and from a top-line standpoint. You know, again, you still do have that service business. You have a significant install base. And as guys pointed out numerous times, when you just talk about the passive income flows, the passive ETF flows, Apple is always going to be a significant portion. The real question is, do you want to be overweight versus the S&P? Do you want to be adding Apple as a singular equity holding versus the rest of your portfolio? And I think right now, going into a situation where, one, the AI supercycle is not even a factor in China. So that there is already a reason for them to look for local competitors. But in terms of them offering something that's a compelling reason for you to pay an upgrade now doesn't really seem to be there. And so I would be hesitant to add. But I do think, as guys mentioned, there is a floor to the price in the short term.
Yeah, I think you're buying weakness in Apple. And I think there's nothing about the China market share loss that we haven't been hearing about for a long time. This didn't just happen. And the fourth quarter, so they were number one, actually, but their sales year over year were down 25% for the fourth quarter. So the issue is absolutely partly the headlines from U.S. China. Are we getting worse? Are we ratcheting up? But I mean, I would have thought in the days of when we were, really putting the screws to Huawei or Xiaomi that China would have already gone after Apple. We know they play the long game. I guess I look at the price of Apple, and I understand that the valuation isn't terribly cheap. But when I at least hear about people say, well, look, there's not going to be a real upgrade cycle and there's no real AI, I don't see that in the price. I don't think there's any really AI dynamic in the price, and I think people will continue to refresh and upgrade Apple. The hardest part about this trade are not the headlines today. It's that Apple trades at 33, 34 times forward. And depending on where you believe you should put a multiple on their services business, and depending on what you think is really the outlook. Let's also not forget, if you think about the ASP in the Apple phone, it's gone higher. The gross margins have actually held their ground, which is nice. When you think about China, that ASP is getting harder and harder for a lot of people. And the domestic competition, they're very good phones. They're very good phones, and they're significantly cheaper, and there is a buy local mentality there.